certainly have seen real estate prices are holding up, private equity prices are near their highs. So fundamentals do matter in the long term.
Have you taken any opportunities amid this run-up in asset prices of some names? Ontario Pension Fund has been making millions by selling out of certain positions in ETFs and of certain stocks that have been driven higher by the retail frenzy. And I'm interested as to whether you've seen any opportunities yourself or are starting to question some of the levels that your holdings are at.
You know, Ontario Teachers is a pretty savvy pension plan up in Canada, but we do talk to them a lot as the two larger teacher plans in North America. And I thought that article was interesting because, you know, really the prices on malls haven't changed. It's the ETFs. And that's really got to be hard when you have a subset of an ETF holding a volatile stock like GameStop that's now volatile, that historically wasn't. I have to say, Caroline, I wasn't thinking of making trades, but when you pointed out that GameStop is now in the top of the Russell 2000, it made me think time to rebalance because that's just pretty illogical. When we look across our portfolio, you know, there's certainly areas that look overvalued. We're still fairly neutral and leaning defensive. I'm really focused in on corporate earnings and how Wall Street reacts to corporate earnings. We saw a third of the S&P 500, but very little of the Russell 2000 this week. The majority of the Russell 2000 is coming in the next 2 weeks, and that's going to matter.
Yeah, great point, Chris. I am curious. I mean, so far of the S&P companies, the larger cap companies we've seen, I think the number I saw is EPS basically down about 1% in aggregate from a year ago, but revenue is slightly higher, about 1%. Obviously, the differences in sectors can be pretty dramatic there, with discretionary really kind of lagging. Is the general health, though, in terms of some of these companies and their ability to not only generate revenue growth, but also the EPS and margins that investors come to expect? Do you have confidence here that we are going to see that as we get deeper into the year?
I do, Romain, but I'm worried. I think that's already priced in. I think we're at PE ratios that already say we're assuming the absolute best rollout on the vaccine and that life gets back to normal by, say, April, May. And you get worried about that when you hear about these mutations of the virus, you hear about the vaccine rollout problems. It really could prolong it. And right now, Wall Street, prior to this week, was assuming the best optimistic view. I think corporate earnings are strong, balance sheets are strong, but everything in the USA is priced to perfection.
Yeah, well said. Chris Elliman, Chief Investment Officer over at CalSTRS. He's sticking with us as we count you down to the close. A little less than 4 minutes to go. Taylor, you're at the board. What's up?
We're at the board. 3 minutes left to go. We've talked a lot about fundamentals today, and we'd be remiss if we didn't also mention technicals. Take a look at the S&P 500, now dropping below that 50-day moving average as the RSI turns lower as well to 45. So that's been sort of a key technical level that we've been watching here, suggesting that the 100-day moving average might be next. But it is the story that has defied technicals. It's defied fundamentals. If we flip up the board, it is my stocks plural of the day, stocks plural of the week. You know it. It is GameStop. It is AMC. It is BlackBerry. It is Cost. It is up 2,000%. So that says more than anything I could say.
What happened to BlackBerry, Taylor?
Yeah, BlackBerry, it's only up, 9/10 of 1%, but I had to throw it in there because I guess it's a personal favorite of mine.
All right, you got to get on Reddit. You could be like the BlackBerry whale.
Let's flip up the board and bring Chris Elliman back in here. And Chris, I'd love to get your thoughts on yields. It's interesting. We're heading into month end. We're climbing higher. We're bouncing off that 1% level. We're back up to a 108. I know, relatively speaking, that's pretty low on absolute basis, but it is a trend that has been higher and higher. What do yields at 110 on the 10-year mean to you?
I have actually been watching the bond market intently closely this week, and it makes me worried. You know, in a way, it's good to have rates float back up. The Fed has such a huge balance sheet. But I am concerned that the bond market is already telling us that they're getting a little bit worried about the vaccine, about how things are going to go. And so I think that's actually, you know, I hate to say it, but fixed income world is usually ahead of the equity world and usually a more attentive to risk. So it is something to watch really closely.
Chris, you said you're defensive to a certain extent with your positioning. How worried are you about the economic rebound? How focused are you on stimulus? How are you looking at the vaccine deployment?
we're watching the vaccine deployment really carefully, Caroline. That Wall Street has put out forecasts on what they think is likely to happen, and there's still what I would call a left-hand tail risk that the distribution doesn't go well. Not enough people take the vaccine, so we don't achieve a herd immunity. And if that's true, then you could be dragging this out to the summer. And I know people are tired right now. People are sick of being at home. Not like we're all eager to go back into the office all the time, but I think people would like to be able to go to restaurants and move around a little bit. So I'm worried about that longer term. The challenge is it's because Wall Street's priced everything to perfection. It's assuming it's the best possible outcome. So I'm worried that we'll have weeks like this where weak news really does weigh in on the market.
Yeah, Chris Edelman of CalSTRS sticking with us here as we count you down to the close. And guys, he makes a great point here about stocks being priced to perfection. We saw earnings out of some big companies this week. Earnings that on the surface looked pretty good, but we're seeing names like Apple sell off here, down 6% over the past couple of sessions. And of course, a lot of other big name stocks, Caroline, really coming off their highs.
Yeah, I wonder how Tesla's doing, hey? But I mean, this is almost the retail trade of the last decade, certainly the last year, and Tesla came out with its numbers and actually fell, but falling on fundamentals to a large extent. We're all more distracted by what Elon's latest tweet is, but as we got 8 seconds to the close, it really feels like some of the big tech stocks were dragging us lower.
Well, they're ringing the bell, Caroline. Seconds are over. We got to get you a better countdown clock over there in London. I know you're kind of the time difference kind of screws it up, but you got to do better. Anyway.
Brutal. All right.
All right. Well, here's your numbers there. You can see the daily numbers on your screen there. Dow Jones Industrial Average down 2% here, pretty much 2% across the board on a weekly basis. We're pretty much looking at declines here of about 3%, and of course on a weekly basis. I kind of forget this is the last trading day of the month.
It is.
So on a year-to-date basis, you're basically down 3% across the board on the major indices.
And let's go cross-asset, because we like to do that with the global macro movers. I'm looking at foreign exchange. I mean, we have a little bit of a seek for safety. The dollar index currently up about 0.3%. And on the back of that, you've seen the yen actually falling out of favor to a certain extent for the last few days. Aussie dollar as well. There's commodity-related FX moves on the downside as well. CAD doing, though, pretty well. Swiss franc on the down 0.2%. There's sort of less direction, if you want, on the FX markets at the moment. We're all just so busy looking at the equity markets. But there was definite direction when you come to the sovereign bond market. I'm not looking at the US because Taylor does that so beautifully, but I'm looking over in Europe. There has been a search for safety. You remember, we're so busy talking about some of the smaller stocks that we forget that in Europe there's a complete disaster happening in terms of the vaccine rollout. There's talk of, an inability to export certain vaccine supplies. I mean, the Archbishop of Canterbury in the UK is weighing in about it on Twitter about the ethics to do with that. This is a huge story that many people are almost being distracted from. Europe has been in the sort of eye of the storm in terms of a risk aversion, and I look at overall the commodity market, WTI crude not doing much, off by 0.25% today, Taylor.
And this story here, you're getting a lift up in yields. So we're selling equities and we're selling treasuries, which means bonds lower, price lower, yield higher. 108 on the 10-year, a 184 on the 30-year. And this folds back into the story that we've been talking about with Chris Edelman, of course, of CalSTRS. Chris, I ask you this question every time you're on the program, so I thank you again for being patient with me as I press you on this again. Are you thinking about lowering that discount rate of a 7-8% if we think that we are here lower for longer with no inflation?
You had to be watching our investment committee yesterday. We spent over an hour and a half debating that with our consultant about what is the forecast for rates. We're not going to go back and touch the 7 right now, but we are considering it. From a standpoint of near-term risk, it's going to be hard to make a 7. Longer term, we think that's a possibility, but it's right on the front of our minds because you're right. Fixed income, our allocation is very low. We're only about 13% in fixed income. We use other types of strategies to mitigate risk and our equity risk across the portfolio, but it's going to be tough to make a return. Now, fiscal year to date, calendar year to date, last year we did great. We made 13% last year in 2020. Been stronger since June 30. So it's the private assets that continue to show a very strong return, especially because of these low interest rates. So you've got to balance those 2 points. If you're a 40 401k portfolio, this is going to be a challenging time for you. But a big diversified plan like us, we've got other tools to use in the tool chest.
Well, and then keeping on that same topic, I guess this sort of ties in too, is just the general outlook for the dollar. I mean, we saw dollar strength for a change, at least on a monthly basis. First time we've seen that, at least as measured by the Bloomberg Dollar Spot Index since September of last year. Do you really see any sort of meaningful push